Okay gang, Apex Trade here. Here to talk a little bit about our next educational series. This one is going to be on the squeeze momentum indicator. This will be following on from our key levels. I think we followed that with the EMAs. After the EMAs, we covered the Fibonacci retracement tool, and then we looked at the VRVP, or the volume visible range volume profile. All really good indicators in their own right, and obviously what we try and do is break them down individually to eventually come up with a strategy and a plan that combines multiple indicators in to give you a really good shot at becoming a good trader. So this one is going to be on the squeeze momentum. I'm going to kick straight off, go into your indicator section, just type in squeeze. First one that comes up will be by Lazy Bear. I think it's the most popular indicator out there. It's number one in the community-based indicators. So what is the squeeze momentum? How does it work? What are we looking for? Well, the squeeze momentum simply is, well, it's an oscillating indicator, and we have two sides to the oscillator. We have the top side and we have the bottom side. Now, the momentum element is the light colored bars. So in this case, it's the light green or the dark or the light red, depending on what side of the oscillator we are. And then the squeeze is the dark side, so the dark green and the dark red, respectively. So the way it's used, the way I use it specifically, not really to trade. I'm not using it to get in and get out of trades. It's more to confirm or give confluence to other indicators. But the way it's supposed to be traded is you're supposed to look at, let's just say, the way I use it anyways, is the squeeze side up until the point of turn. So right now, the blue line, the blue dots, the light blue dots and the dark blue dots indicate the strength of the signal. So the light blue is the signal is a strong one, and the red ones, or sorry, the dark blue ones are the indication that the signal is maybe not so strong. So the way I'm going to kind of just talk about it is we're going to start with the squeeze, right? So looking for the first candle on the squeeze side. If I refer to the momentum side, I'm referring to the light color. If I'm referring to the squeeze side, I'm referring to the dark color. I may use them interchangeably, but I just don't want to keep having to explain myself. So the first candle on the squeeze side, you want to look to get a short entry in, okay? At least if you're on the top side of the oscillator. So this would be our first candle entry point here, right? So we missed the first one, is just confirming that we're in a squeeze. Second one, we're going to enter. So let's see, where is my shorten tool? It's here, right? So first one, we would have gone in here, and where would we get out? We get out on the first dark red when we're in the strong signal, yeah. So we would have missed this one because it's dark blue. So let's see what that move would have looked like. Would have got in round about here. Don't know what your stop would have been, maybe just above this area here. And we would have got out on this candle here. So let's just bring that in and bring this down to that area. So it would have stopped, let's see, about there. Would have been an 886 point move, about a 2.8 risk to reward ratio. Would have been quite a nice one. I have to talk about this section. This is a really horrible section for the squeeze momentum. Didn't really give us too much by way of kind of motion, but let's just say we get in. Let's see, this would have been your first candle on the squeeze side. The problem is we got stopped out straight away by this, and I'm going to show you why. This would have been one to avoid as a, I guess, a more savvy trader. This would have been a vector candle. This one is the market maker's attempt to get one last squeeze, because he knows that a lot of people are using this indicator, and he thinks, okay, now we've had a run to the upside, time for the downside, which is upside in terms of the kind of element on this. So as this starts to fade, price is supposed to go up, but this candle will give you cause for concern, because let's just say, I don't know, if we go to a long, potentially you're looking, maybe this is a long here, because it's the first one. Let me just delete that. I think I pulled a short. It's a long one. We've got in at this one here. Where would our stop have been? Probably quite tight. Maybe you would have just covered these areas here. You probably would have got stopped out though, if we're honest, because this candle would have took us out. So it's an invalid signal. But you theoretically would have jumped straight back in after this, because this move here turned the candle red, so you'd have got back out and again got back in on another long. Light blue, that indicates that the signal is strong. So let's go with a long candle here. Sorry, with a long position. So we would have got back in on this candle. Our stop would have been probably just below the point here. And where are we going to? Well, it depends on your appetite, but this would have been the first candle that we would have got out on the squeeze side. So let's just see where that is. That's that candle there. We go up to the bottom of that, which is here. Still a 680 point move. Risk to reward ratio of 2.3. Still would have been a nice move. This is challenging, and only that I've been watching this for some time, that I wouldn't have got an entry into here, because although the peaks are going although the peaks are starting to drop, the problem we got is divergence, right? So we have these 3, 4, 5 candles here. We had this big sell-off candle. So you're thinking, great, but look, we're still bullish, right? This is where we got stopped out, but we're seeing divergence, which means what? Well, we're going up here, but we're going down here. I don't want to see that. I don't want to see that. Because that tells me it's inverted to what the actual signal is. So I'm waiting on these ones. I'm not going to bother at this one. You know, this one's different. We see a downward momentum here, and we see downward momentum here. That's a good signal. But this is downward here, but we're going up. Right, so that tells me we're losing bullish momentum on the squeeze momentum indicator, but in actual fact we're still rising up. So you've got to be careful of false signals, and only experience will tell you that, unless you are pairing this with other signal and strategies. So how do you kind of anticipate that? Well, you just need to look at the candles. You just need to look at what's going on. You know, wait until you start. I mean, this potentially, you might have looked at this and thought, okay, well, I'll see if we get a next candle that closes below this one to give us a bearish indication that it is truly in, and it never really. Where was the first place it came in? This one here, yeah. This would have been our next move. So how would that have played out? Well, we would have took on the trade at this point. Sorry, this one here. So it would have been a short. So it would have been the second candle in. That's that one. And how long are we keeping it for? Well, we're keeping it until it comes to here, right? So we bring this down to there. This would have been where we took our stop. Where did that stop? Just there. Would have been a 600 point move. Probably would have just been above the last consolidation. Risk to reward ratio of 1.67. Would have been a nice enough trade. Next one, we would have been. So this would have been our next entry. So we go long. Where do we go? Second one in. This would have been our entry, and we are looking for a long. Where would we put our stop? You're probably looking. Oftentimes, people will use 2% of their portfolio. That would have give you a good move. Maybe you would have wanted to just get below this area here, entirely up to yourself. You may have been really tight and got just like a 1%. I think if you're constantly trading at 1%, you're going to get stopped out much more than you are going to get benefits. So I would always probably recommend maybe looking at 2%. If you can stomach that in your portfolio, I think that's probably a fair way to kind of think about it. Where are we bringing this to? Well, as we know, the first squeeze candle on the bullish side, that would have got us stopped out. Oh, we'll take off there. That would have put us to there. 680 point move, risk to reward ratio of 1.46, depending on what leverage you're trading, would have been a nice move. And yeah, you can see these, you can play these out all the time, but it is a really good indicator. You know, I like to use it more for confluence of additional indicators. So looking at where the momentum's starting to change, looking at a good entry point using the money flow index and my EMAs. Preferably I use the 21 and the 30 for shorter dates, for day trading / swing trading, and longer like the 50 and the 200 more for kind of longer term trades. But you can see how these play out. Yeah, I mean, you know, we've got this kind of small element here where we're not really in the longer range of the squeeze momentum, and that's just because it's the weekend. But I just thought I want to give you a quick overview of the squeeze momentum indicator. It is a solid tool. You can see why it is number one. You've got to have a little bit of an experience to play with it, though. You've got to figure out and see what you're doing with this thing, and use it in other ways. Moving forward, number one, we're going to cover the money flow index. For me, it's the number one indicator for them all. I think it's the best indicator, but this is the squeeze momentum. What I will be doing is starting to, once we've gone through enough indicators to give a good sense of what each one does, how we combine them into multiple to give you a good strategy to play, in a fairly decent manner. So this is all I've got for you. Just a quick one on the squeeze momentum indicator. Just by default, just so you know, by default this is, let me just, that's saved as default anyway, but I think the two colours here, I think this one is grey and this one is black, or the other opposite way around. This one might be grey actually, sorry, black, and this one might be grey. And these circles are crosses. So I don't like to use the crosses, I like to use the circles, each to their own. But I think visibly it gives me more of a view on the stronger signals versus the weaker signals. So just bear in mind, yours might look a bit different when you first open it up. But if you want to copy me, these are the colours I've used. This blue here for the stronger signal, and this blue here for the kind of the weaker signal. And as I say, I'm using the circles, not the crosses. Okay, that's all it is. Let me know if you've got any comments or you have any ways that you play this a little bit differently. As I say, I do use this, but in a kind of multi-indicator strategy rather than just singular. But I'm just covering how you would perhaps get in and get out on just using these alone. Peace out.